As much as Dave Ramsey really harps on the elimination of debt and how people want to avoid debt, there is a different way to look at this. The rich recognize that not all debt is created equal. Using some good debt, real estate investing loans, business growth loans, something that is going to be very low interest to build an asset or produce income of a much higher yield can essentially turn it into money and a money generating machine. Now, shunning bad debt, that is something that the rich absolutely do. High interest credit cards, not buying things they need, getting rid of the bad debt that essentially does not create any value or does not add assets to your class is something that you want to eliminate. Now, number 6, networking is non-negotiable. When you look at building relationships, this is really the craft, and creating and growing wealth is going to be important because networking is just not about getting a stack of business cards. It is about building genuine relationships with people that have the same ideas or ideology that you do have. According to LinkedIn, 85% of jobs are filled through networking, through the power of connections. And we can't overlook giving back some of that assets and giving back to charity. Many wealthy people are very generous. Even thinking of Mr. Beast and his organization, giving back means more than just a tax benefit. For a lot of individuals, it gives you a sense of purpose, also builds communities. When you look at Bill Gates, when you look at Oprah Winfrey, 2 incredibly rich individuals that give a lot back and have a really impact within their communities and within society. And you have to make sure, do your research, know exactly where this money is going. As we get into number 8, being financial literacy is a lifelong journey. There is no point in my career that I have stopped going in and really getting a financial education, upping my literacy, reading books. The rich dedicate time to understanding money and exactly how it works. If you want a perfect book for this, The Psychology of Money should be given to every middle schooler or high schooler, should be a point that is read. But knowing how to not only grow your money, but also the fact of protecting it. When you start looking at reading books, consulting advisors, keeping up with the economy, knowing the difference between IRAs, 401ks, looking at mutual funds and ETFs, you have to know exactly what it is. With this knowledge, you can make informed decisions on everything you want to do. And the big one that I'm going to go over, keeping your emotions in check when it comes to money. This is one where the stock market dips 5%. Everybody gets a little anxious. They start wanting to sell. It dips another 5%, entering in the correction territory. That's it. Fear has taken hold. They are going to liquidate it. Fear and greed can ruin the best financial plans.